Time to say hello and good morning to Deven Choksey and Reliance. Deven bhai,
Yes, Nikhil, good morning.
सवाल तो था Reliance. I have to prompt Reliance and I expect an answer. क्या हो गया अचानक? What's changed suddenly?
No, nothing has changed. I think Reliance is coming with the result on Friday. So I thought you will ask me on next Tuesday.
You think numbers will be strong? Are we in for a beat?
Yeah, I think the in all seriousness, I think this quarter should be working good for the company. On one side, they have had the advantage of lower crude oil prices, which normally I think they buy in discount. I guess I think in this quarter they are like to get slightly more advantages on this particular front as well because of the lower prices. So the industrial business of refining petrochemicals and polymer business is expected to show the growth both on the demand side of the situation as well as I think on the cost side. On both sides, this business is likely to show relatively stronger set of numbers compared to previous quarters. Then comes the consumer-facing businesses, geo financial, geo platforms, and the Reliance Retail. Both these businesses are growing at a steady pace of around 19 to 20% in individual verticals, and that is where again I think you're going to see steady set of numbers. Geo platform, as it stands today, is about 121 lakh 20,000 crore top line with 60,000 crore worth of EBITDA making proposition. And the situation for the Reliance Retail rather, I think is going to be equally strong with somewhere around close to 3 lakh crore worth of revenue book. And I think the corresponding profit around 7.5 to 8% EBITDA level. So certainly, I think both these verticals looks equally interestingly positioned. So Reliance certainly looks number wise. If you look at it, this quarter should be a good quarter. We'll all have to wait and see the announcement pertaining to the renewables, which is expected to happen in 24-25 financial year.
44 points down for the Nifty spot. That's perfectly okay. I don't think anybody is going to be really complaining there. Nuresh, a stock which is worth revisiting and we'll be talking to the management also a little later is Raymond. Not at a 52-week high, but a big surge yesterday and it closed almost at the highest point of the day. Do you think Raymond is looking good for more?
So after the correction in the last few months, the stock went through a sideways phase for the last almost a month. So technically, it went through that consolidation and it was in a very tight range. And yesterday was a price volume breakout. So that indicates a short-term momentum breakout is done. Now, in this case, we need to watch out whether it can go back to that 2150 mark, which was the previous high, or take a pause before it. So the risk reward is good here. One could keep a stop loss at 1750 and expect a move towards at least a 2100 mark.
Another, now what do we have on it? Bandhan Bank. As per December 2023 data, HDFC Bank shareholding has fallen below 1% of they've completely exited from Bandhan Bank. You know, Bandhan Bank has been a marked underperformer. Until the time we don't get real clarity as to, you know, what essentially the impact of the audit would be on them, I think in the near term it will remain, markets will remain nervous. Now, HDFC Bank does not appear in Bandhan Bank shareholding. So now what's Bandhan Bank got to do with HDFC Bank? It's largely because of the merger. In Bandhan Bank and Grove Finance were there, and HDFC Limited had stake in Grove Finance, and Grove Finance had stake in Bandhan Bank. Because of merger, everything came together. And HDFC Bank, in a sense, they had to reduce the ownership in Bandhan Bank because one bank cannot have investment in some other bank. So over the years, Reserve Bank of India gave them time to reduce it, and I think the shareholding has come down. Now, optically, what this means is that one large supply which was coming for Bandhan Bank is over. But till the time markets don't get convinced about the recent audit concerns which have come for Bandhan Bank, I think in the near term, this is a stock which could remain under pressure. And Deven, by this, in a sense, has been a stock where I would say that there was a lot of promise, great brand, but they have consistently disappointed the market. Anything goes wrong in that in the geography which they are in, which is West Bengal and Assam, they tend to take a hit.
I think equally my understanding on this particular business, they are most vulnerable to the situations which are there in the respective geographies, which you rightly hinted at in the eastern belt of the country. Probably, I think this is where I think the challenge would be to pick up such kind of companies which are not having the pan-India presence, but which are having the local presence. So on one side, I think they address the customer segment, which is relatively the weaker segment of the customer. On the top of it, I think you are extending the unsecured loan to them. And then the situation comes in a given situation, I think the recovery related issue happens. I think that is where probably you get the maximum hit. Uh, Earlier days, I think most of the corporate banks, I think when they were struggling with their fintech platform, they were unable to expand their reach. Now, today, that situation is gradually receding, and most of the corporate banks, with the digital reach, including through mobile, is now having pan-India presence, I think, to the local customers. And they are far better off in having the cost of funds under their control and at the same time, I think, assessing the credibility of the borrower at the same time. So, to a greater extent, I think the businesses which SFBs or the investors who invested in SFBs, they've systematically, I think, started looking at more promises in the larger banks who are having the ability to expand the reach. That means, I think, to fill up whatever the advantages which SFBs would have, they would have that ability. At the same time, I think they've already started disrupting the market by way of extending the microcredits also in some pockets. So in my viewpoint, I think the premium valuations which the SFBs have got, probably I think that were to come into some amount of pressure at any point of time, and which is what we are experiencing in the marketplace at this point of time. I believe that I think larger the size of the bank, that would be the better advantage for investors going forward.
Report from JP Morgan on Telecom, and they are making a case that upgrade Indocent Tower to overweight and Bharti to neutral. Peak 5G capex is behind us. As Jio and Bharti are close to achieving their targets, and the focus would now shift to recovering ROIC momentum, free cash flow, and deleveraging. Then, there is a lot of logic in what JP Morgan is now perhaps advising to their clients that go and buy Telecom. Bulk of the capex is over. Now you've spent and you've constructed the 5G towers and 5G technology. Indians, we all, I mean, for us, our data consumption is going to increase, and for a telecom company, when the capex cycle is over, and when that has typically happened, that always has led to a huge boost in profitability and return ratios. Do you think a stock like Bharti is at the cusp now, where next 12 months will be better than the last 12 months?
Uh, Obviously, one would like to think that having completed the capex program, the next move would be to improve the balance sheet. And for improving the balance sheet, two aspects are to be taken care of. One, obviously, I think the leverage part of the balance sheet, how systematic I think we can bring it down going forward, because the larger part of the capex is over in implementing the capacities under the 5G. On the other side, I think the revenue book has to increase. And that is where the eyes would be on. Actually, Street is keeping a very close eye on how exactly the revenue book will increase for the data packages that are being sold by these companies. In my viewpoint, I think more number of applications coming under the 5G, more number of applications coming onto your mobile devices would mean higher amount of data consumption. So on one side, volume increase, and on the other side, I think if they end up increasing the price, then it would be a sweetener. In my viewpoint, I think both Bharti as well as Jio, I think are sitting on a huge amount of potential, which is going to be an upside going forward. So if up till now we have seen the growth of around 20% in the kind of business, quite possible that Geo platform kind of companies would end up providing a growth, I think, in excess of 20% to 25 to 30%, given the fact that I think they are also reaching out to the enterprise through the air fiber and the homes also through the home air fiber. This kind of proposition, along with the higher amount of 5G rollout, could possibly bring higher amount of growth into the business of the company. So eyes could be certainly onto the telcos, and both Geo platform as well as Bharti are looking interestingly positioned.
Another interesting brokerage note this morning is Morgan Stanley's view that's come out on the entire auto sector, saying that while the overall industry growth has moderated, EV growth is only going to accelerate, and supportive policy is also going to be a big tailwind when it comes to earnings. So they're bullish on a lot of the four-wheelers. Tata Motors, M&M, Ashok Leyland are some of the preferred bets, but they've downgraded an Eicher Motors. Deven, what's your assessment on the EV growth, companies capitalizing on it, commodity prices, as well as the earnings?
Well, I think on one side, the industry is experiencing fantastic times, both in passenger vehicles as well as in commercial vehicles, and of course now in the two-wheelers as well. One is experiencing higher amount of growth from the consumer. These numbers, I think, up till now, I think, have not been seen, are now sounding good music to the ears, where I think we are talking about 5 million vehicles kind of a market which India has created. So to a greater extent, I think we are relatively, I think, more comfortable position. Now, between the IC and the EV, the good component is that EV, the cost of production is systematically coming down. Up till now, the EV hasn't been making profits. I think that is where probably you are now likely to see the situation of profit coming in because the cost is coming down, including the battery cost and battery management systems, which are coming up now. They are likely to save the EVs, I think, from the higher cost and probably give them the better opportunity on the on the side of I think the volume pickup, which is now likely to happen in a systematic manner year after year. So we remain distinctly confident about auto. Higher amount of spending by the individuals because of the higher per capita income. This is also another good sign, and that's where probably I think one remain bullish. Within the space, I think we feel that commercial vehicle is still underpriced, and probably most of the commercial vehicle stocks shows distinctly high amount of growth trajectory. So one could remain positive in that space, I think, more than other space at this point of time within auto. Of course, auto ancillary remains, I think, the choice because of the higher amount of integration most OEMs are doing with the ancillaries. That's where probably likes of Minda, likes of Minda Corp, among others, I think, are looking relatively much better into the portfolio for investment.
All right, stay with us. Let's also.
Deven bhai, how would you approach Polycorp? Everybody had a view last Friday. What is your view? I want to understand your independent view.
So, Nikunj, I believe that the fundamentals of the company haven't changed much. Yes, I think some of the things which have come out and which is yet to be confirmed by the company, I think they reasonably sound serious. Of course, I think that needs to be clarified by the company. That's what I would like to hear first from the company. But keep that part aside for a while. I think the stock has significantly corrected on the valuation. This is a company which is constantly, I think, building the capacity and participating into the building material segment where the growth remains also on a higher side. I believe that I think given the kind of expansion benefit that we are likely to see in next 4 to 8 quarters, I think this is where probably are likely to see 25 to 30% kind of a growth for the previous year's business from this company. And that's where the valuation comes into play. Prior to this, the valuations would remain at an elevated level of around 40 to 50 times price earning ratio on forward basis. Today, the valuations have come down to 30, 50, 35 times price earning ratio on a forward basis. So to a greater extent, that comfort is now available. If the company is growing at around 30% plus rate of growth and the valuations have come down equal to the growth, that means that I think it's a time probably to look into this company from investment point of view than otherwise. If there are many negative surprises left, I think then one will have to listen to the management first. But management has categorically denied so far. So to a greater extent, would like to go with whatever they have disclosed. I would believe that I think the current level of valuations, they suggest that I think one can buy so gradually and with more clarity at full hog, I think one could buy into the portfolio. Business remains absolutely convincing as far as I'm concerned.
9 a.m. Let's check in on those pre-open rates after yesterday's stellar move at 22K, where the pre-open rates settling at, well, around the 21,100 mark as of now. For the Sensex, though, we've tempered off about 460 points in the red. Those are the pre-open rates this morning. Let's find out those mid-cap strategies as well. What is it that our chartists are picking out as their mid-cap calls? Kunal, what's looking good?
So I'll go with the buy on Landmark Cars. That's a stock which yesterday gave a inverted head and shoulder breakout on the short-term charts. It's almost like a 40-50 pointer pattern for the stock, and the breakout is around 840 marks. So would suggest a buy with a target of 880, stop aside 820.
Right. Naresh, what about your mid-cap strategies?
So that would be a buy on Taj GVK Hotels with a stop loss at 240 and a target price of 280. The stock has consolidated well. Had seen a sharp correction in August, September, and has not recovered back to the previous all-time highs. Majority of the hotel names have made new all-time highs. So there should be a catch-up in this one over the next few sessions.
Okay, fair enough. Meantime, It's interesting, Deven, that the rise in spiritual tourism, particularly with the Ram Temple, has seen a lot of demand coming in a lot of these places, and the hospitality companies are capitalizing on this. How would you look at this as a trigger for a lot of hospitality companies? What's the view on the space as a whole?
Evan, I think this is a fundamentally very important point of view from the country as a whole. On every side, I think you have got different kind of spiritual places. In fact, as we talk, India has got about 35 lakh mandirs across the country, and small and big mandirs. And most of these bigger mandirs are getting transformed into the bigger places, including the Puri temple in Orissa or Mahakalin, Ujjain, or for that matter, the other ones, I think Varanasi and now Ayodhya, next could be Mathura. So all these new temples are actually, I think, reviving the economy of those particular places where probably these new structures, new places of worship are coming up. In my viewpoint, I think easily 15 to 20% of India's population is dependent on, I think, this kind of economy that we are basically talking about. As I call it, it's a mandir economy, which is, I think, feeding about 15 to 20% of total India's population directly or indirectly, who all are there in the ecosystem. So this is going to be an important move as far as the country is concerned. And certainly those companies which are catering to these businesses, they are relatively going to have more opportunities. Like in Ayodhya, the state government has issued about 100 applications for setting up five-star hotels. Government is talking about investing 85,000 crores of rupees in 10 years' time into this place. I think most of the companies which are focusing on these spiritual places and the surrounding areas therein, I would think that I think they would have relatively better times, be it IRTC or even the newer ones. I think the Pravek kind of company which has entered into the tent city kind of a business. They are some of the interesting looking propositions from the investment point of view. Of course, the stock prices are adequately and fairly priced today, but maybe I think corrections in the price would be a good opportunity to add into the portfolios in some of the names.
Okay, Deven, great to have you on the show. Thank you so much for joining in
Okay.
today. Good chatting with you.